Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we go into a new week here, very much as we discussed last week, we've seen that end of month profit taking across many markets, from commodities to indices to cryptocurrencies, which in fact provided us with one of the best trades we've had so far this year, which is banking 10,950 points on 4 positions on Palladium. So essentially, for every 10 lots that you would be trading, that's over $1 million of profit. And for every 1 lot that you would be trading across those 4 positions, that would generate you over $100,000 of profit. So it's been a really solid month over February again. As we mentioned to you last week, look out for the potential for the dollar to pick up momentum at the end of the month, as you see capital flow out of many different assets with profit taking at the end of the month, and that can drive the dollar higher and put pressure, of course, on equities, commodities at the end of the month. So we've definitely seen that, and this is really going to provide fantastic opportunities now as we move into March. So February has been a very bullish month overall for commodity prices. We of course at the start of the month saw silver prices break out 13% on the very first trading day of February, breaking out to $30 an ounce for the first time since 2013. That's silver's biggest one-day move since 2008. Copper prices also over February, they hit 10-year highs, up over 60% since the start of the year. However, the most impressive metal has been platinum, which has surged to 6.5-year highs just last week. A year ago, platinum was trading at $526 an ounce. Last week, it traded near $1,300 per ounce. So it's up 147% in the matter of 12 months. Platinum's explosive rally higher also pulled up palladium prices, which are now up 70% in the last 12 months. So as we mentioned, Palladium, we banked 10,950 points over 4 trades last week. Elsewhere, oil prices, they soared above $65 a barrel, hitting 13-month highs, up over 260% from the lows that we saw in April 2020. At the earliest start of last week, we banked 3,000 points across our energy positions, and over the 27 commodities in total, ranging from metals to energies to soft commodities, all have posted double to triple digit gains over the last 6 months, and this is just the start. Evidence continues to mount that we're transitioning into the super cycle for commodities. Definitely one of the most lucrative asset classes to have in your portfolio. A commodity super cycle occurs approximately once every 30 years. You definitely do not want to miss out on the opportunities this is going to provide over the course of this year. And now you've been gifted with a pullback towards the end of the month into a new month where you can expect fresh capital to come into the market. This is going to provide you with really attractive opportunities to buy back into commodities at a big discount as we transition into March. As we know, bull markets, they don't move up in a straight line. They will zigzag, which will provide you as a savvy trader great opportunities to take advantage of these pullbacks that we're seeing in the market right now. Now, on the radar as we go into next week, the biggest market moving events that you want to be aware of and will be watched closely, they will include a number of Fed speakers. So especially as high yields, they're starting to have a negative impact on the wider market. And the spike that we've seen in the latest week, this will really increase the focus on yield curve controls, an event that would then send real yields and the dollar lower, and commodity prices would skyrocket once we see that intervention. So next week, we're going to see a whole host of Fed speakers. That will include Fed Jerome Powell, providing the Fed with an opportunity to slow the Treasury decline by at least starting to express some concern, which was notably lacking so far from Jerome Powell's previous testimonies, and it's likely to be tested following on from his bad judgment of the markets last week during those testimonies, when he repeatedly dodged the question regarding the sudden rise in yields, which accelerated the market sell-off into Friday's close. Other key macro events going into next week include ADP employment change, jobless claims, as well as the biggest event next week, which will be Friday's non-farm payroll data. So with that, let's move over to the charts and we'll talk you through what we're looking at here as we head into a new week. First of all, let's go over to Palladium. So as I mentioned last week with our traders at the Gold and Silver Club, we banked on the breakout and the surge here back towards 2-month highs. We banked 10,950 points on 4 positions. So that was a great opportunity to bank a windfall amount of profit before we got the typical sell-off that you see right at the end of the month here. You can see, in fact, where Palladium prices over Thursday and Friday, they dropped down over 2,000 points to the downside. Again, this is very common. We're coming right to the end of a month there, and then what you tend to see is profit taking accelerate into the close on Friday, and then fresh capital comes into the market on a new trading month. It will be Monday the 1st of March. This is typically where you can see a bounce for markets as fresh capital flows in at the start of a new month, and this is going to be relevant to other markets going into next week as well. I would definitely keep an eye on gold here. So gold into the close on Friday started to get a bid here, closing at 1,734 US dollars per ounce. So as we go into a new week, I would certainly look out for the potential of a retracement here, given the acceleration that we saw on Friday. Again, we mentioned this to you on last week's commodity report and also Tuesday's gold asset of the day. Look out for profit taking at the end of the month. This can often help the dollar to slingshot higher, which is what we saw later on in the week. In fact, let me show you the dollar, because we had 2 positions on the dollar where we banked profits on Friday as well. So the dollar had a really nice breakout, especially picking up momentum over Thursday and Friday. Hope some of you caught that move as well. So we had a nice breakout move to the upside on the dollar here. And of course, again, same story that we typically see here. Capital flows, as you see, a lot of traders banking profit in many markets. As they move into cash, this propels the dollar higher. And that's exactly what we've seen into Friday's close here. So that's worked out really well for our dollar positions. And then what we've seen here on gold is essentially a tap all the way down to 1,717 US dollars per ounce. Drop it down into the lower time frames here, and this is where I would look out for the potential of a retrace going into the start of next week. Certainly you could get a move back towards the neckline that we broke down from on Thursday through to Friday, and my expectation would be certainly at the beginning of next week as we start off into March that we could get a nice bounce higher here at the beginning of the week. Now later on next week we do have the non-farm payroll data, so after we see an initial potential bounce here at the start of the month, again it's going to likely see just more range bound price action. Again, be a trader in this market. Gold is a great traders market currently. It's not a buy and hold market. If you've been buying and holding gold, you've essentially made no money here over the last 6 months, because gold has continued to range bound, right? So if you look at where we broke out from, which was the summer of last year, we broke out going back to July. Since then, broke out to all-time highs, but essentially gold has retested those levels again from the breakout point that we saw back in July here. So it's not a buy and hold market, but it's a fantastic market to be trading. Coming in and out of this market regularly is ideal. So that's what I'm looking at as we go into next week there. The potential for a bounce at the start of the week. Fresh capital comes into the market. It's a new month, but then look out again for pressure to come in from approximately the middle of the week onwards until Friday, where you do have non-farm payroll data. I'm just expecting this to continue to be a trader's market. Just keep taking advantage of this in and out price action, the flow of this market, and make sure you'll be nimble, regularly banking profits. Don't get too greedy when it comes to gold. Just keep locking in those profits. Similar with silver as well. So if we drop it down into lower time frames here, you'll in fact see where silver again found support around that 26 handle. Look at the daily here. You've had a third tap right into support yet again, a higher low here, nice retracement into the close. So I'm looking at the potential for silver to bounce going into the start of next week. Again, just drop it down into the lower time frames. You'll see exactly what I'm talking about here. It's very range bound market, silver at the moment. Finds resistance around 28, finds support at 26. Very tradable range currently for silver. So I'd certainly look at that going into the start of next week. Again, later on in the week, we have the non-farm payroll data, but at the beginning of the week, I'd be looking for a bounce here on the metals, and also looking at platinum as well. Very similar price structure. Platinum, very typical for platinum, in fact, to break down like this at the end of a month. Profit taking to accelerate at the end of February here, which is exactly what has happened after platinum prices broke out to 6.5-year highs. So a very natural pullback that you're seeing on this market. It's overshot a little bit in terms of the acceleration to the downside. So my anticipation would be that we could also get a bounce on this market at the start of next week. And then I would also look at the energies here as well, which have been on a great run for us. So delivering 3,000 points to the upside there on energies last week. So we've had a really strong run. For example, some energies are up over 25% over the month of February. Really stellar month for energies here. And then finally, we've also got copper as well. Copper price is up 15% over the month of February. Again, bit of a pullback here over Thursday and Friday. This is certainly a market that the deeper it pulls back, the bigger the opportunity will be for the acceleration to the upside on the next run up here. So copper, I would absolutely have on the radar. It recently broke out to 10-year highs. The sentiment is a bit overheated on copper at the moment, so you want to look at pullback as buy opportunities once we settle as we progress throughout the month of March. But I would definitely keep this on the radar. Copper prices are up 60% so far in 2021. And on that note, on sentiment, gold sentiment has also dropped down to the lowest levels in over a year. So that means that most of the market is very negative, very pessimistic on gold. And often it's the case when the sentiment gets this negative, gets this bearish, this is where you tend to see the bounces. And we've overshot into the close on Friday. In terms of the acceleration to the downside, this can often provide you with some really great opportunities. When the market moves into extreme fear, this is often where you can get these nice bounces just to capitalize on. But again, be a trader here. It's not a buy and hold market. Don't expect the price to suddenly go to all-time highs at the moment. Just make sure you're taking regular profits off the table, keep coming in and out of the markets. This is the best way to trade commodities here. Just regularly bank those profits and this will serve you very well. To get that edge in the market, you do want to be trading the same as the professionals. You want to be trading like the hedge funds, the money managers, the institutions, utilizing a research-driven approach to the markets. The greater your data and intelligence, the greater that your edge will be. Trading like every other misguided retail trader out there who's using outdated technical analysis or gimmicky technical indicators, that won't work in today's market conditions. You need to make sure that you're utilizing a lot more data and market intelligence. You want to be looking at capital flows in the market alongside the daily, the weekly, the monthly, the quarterly, the yearly cycles. Be mindful of the key news items and events that drive commodity markets. Alongside that, utilize macroeconomics, the intermarket correlations, the ratios, the seasonal plays in the market, key areas of liquidity. It's just as important to know when to close and bank profits as it is to enter into your trades. And of course, understand how the hedge funds, the money managers, the banks and institutions are positioned in the market in real time. And that will help you massively to get an edge and not get chopped up like the majority of the retail market. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You have access to real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.